ExamPrep.School. Maryland Life Insurance Producer exam code 20-27. There are 4 practice exams in this series. This video covers Practice Exam 1. The first 20 questions are free. In this video, we will be covering the following major categories for Practice Exam 1. Annuities. Federal tax considerations for life insurance and annuities. General insurance. Insurance regulation. Life insurance basics. Life insurance policies. Life insurance policy provisions, options, and riders. Qualified plans. Let's walk through the format. I'll read each question and its choices. Let's get started. Question 1. Which of the following is not a requirement to qualify for an initial resident insurance producer license in Maryland? A. Hold a high school diploma or equivalent. B. Be at least 18 years of age. C. Pass the state licensing examination. D. Submit fingerprints for a criminal background check. A countdown circle appears in the top right. Once it completes, the answer is revealed. You can pause at any time if you'd like longer to think. If you'd like additional practice covering more topics, see the description for our book. The correct answer is A. A high school diploma or its equivalent is not mandated by Maryland law for initial resident producer licensure. The other items are statutory prerequisites. Reason B is not correct. Applicants must be at least 18 years old to qualify for a resident producer license. Reason C is not correct. Passing the prescribed state licensing examination is a core requirement. Reason D is not correct. Fingerprint submission for a background check is mandatory before issuance. Question 2. Under Maryland reciprocity rules, a non-resident insurance producer seeking licensure must satisfy all of the following except A. Hold a valid resident producer license in the home state. B. Submit a certificate of licensure from the home state. C. Pay the Maryland reciprocal licensing fee. D. Complete Maryland's pre-licensing education requirements. The correct answer is D. Maryland accepts non-resident licensing by reciprocity without requiring completion of Maryland's pre-licensing education. The other items are mandatory. Reason A is not correct. Maintaining a valid home state license is essential for reciprocity. Reason B is not correct. A license certificate from the home state must be submitted. Reason C is not correct. Payment of the specified reciprocal fee is required. Question 3. What is the non-refundable fee for an initial insurance producer license application in Maryland? A. $20. B. $100. C. $70. D. $50. The correct answer is D. Maryland statute sets the non-refundable initial producer application fee at $50. The other amounts are not prescribed for new applications. Reason A is not correct. $20 is below the statutory requirement for initial applications. Reason B is not correct. $100 exceeds the legislated amount for a first-time application. Reason C is not correct. $70 does not correspond to any documented fee for new applications. Question 4. Applicants for an insurance producer license in Maryland must submit fingerprints for a criminal background check within how many days of filing the application? A. 30 days. B. 15 days. C. 60 days. D. 90 days. The correct answer is A. Maryland requires fingerprint submissions for state and national background checks within 30 days of application. Longer periods do not comply with regulations. Reason B is not correct. 50 days is shorter than the statutory window. To standardize crop insurance premium rates and policy forms across all insurers in the state. Reason D is not correct. 90 days is beyond the regulatory deadline. Question 5. How many continuing education credit hours must a Maryland insurance producer complete in each biennial renewal period? A. 16 hours. B. 36 hours. C. 24 hours. D. 48 hours. The correct answer is C. Maryland mandates 24 continuing education hours every 2 years for producer license renewal. The other totals do not meet the statutory requirement. Reason A is not correct. 16 hours is below the required total. Reason B is not correct. 36 hours exceeds Maryland's mandate. Reason D is not correct. 48 hours significantly surpasses the statutory requirement. Question 6. Under Maryland regulations, continuing education providers must retain trainee attendance records and course documentation for at least how many years? A. 2 years. B. 3 years. C. 4 years. D. 5 years. The correct answer is C. Maryland requires approved CE providers to maintain attendance and compliance records for a minimum of 4 years. Shorter retention periods are non-compliant. Reason A is not correct. 2 years is shorter than the mandated retention period. Reason B is not correct. 3 years does not meet the minimum requirement. Reason D is not correct. 5 years exceeds the statutory minimum. Question 7. If a Maryland insurance producer fails to renew within 30 days after expiration, but applies before 1 year has passed, which condition applies? A. Must retake the state licensing examination. B. Must complete an additional 10 CE credit hours. C. Must pay 150% of the standard renewal fee. D. Must reapply as a first-time candidate. The correct answer is C. Maryland permits late renewal within 1 year of expiration upon payment of 150% of the regular renewal fee. Exam retake or CE increases are not required in that window. Reason A is not correct. An exam retake is not mandated until after 1 year. Reason B is not correct. Additional CE hours are not required for late renewal within 1 year. Reason D is not correct. Reapplication as first time is not necessary for late renewals under 1 year. Question 8. Under Maryland law, how long after an honorable discharge does an active duty producer have to renew an expiring license without penalty? A. 6 months after discharge. B. 1 year after discharge. C. Duration of service plus 180 days. D. Renewal deadlines are not extended for military service. The correct answer is A. Maryland extends renewal deadlines for active duty personnel to 6 months post-discharge. Other timeframes do not reflect the statutory provision. Reason B is not correct. 1 year exceeds the legislated extension period. Reason C is not correct. Service plus 180 days is not the statutory formula. Reason D is not correct. Deadlines are explicitly extended for active duty service. Question 9. A newly licensed Maryland producer entered into a contract with Apex Life Insurance to sell life policies. Under Maryland law, which requirement must be met before the producer may lawfully transact business for Apex in Maryland? A. Insurer must file notice of appointment within 30 days of the contract effective date. B. Producer must complete 40 hours of continuing education within 30 days of contracting. C. Producer must pay an appointment fee directly to the commissioner prior to issuing any policy. D. Insurer must file notice of appointment with the commissioner within 15 days of the contract effective date. The correct answer is D. The correct answer is that Maryland law requires an insurer to file notice of appointment with the insurance commissioner within 15 days of the contract effective date before the producer may transact business. Reason A is not correct. The deadline is 15 days, not 30 days. Reason B is not correct. Continuing education requirements are biennial and unrelated to appointment filing. Reason C is not correct. The appointment fee is submitted by the insurer, not directly by the producer. Question 10. Forest Mutual Insurance has terminated the appointment of one of its Maryland producers. Under Maryland regulation, within how many days must Forest Mutual file the termination notice with the insurance commissioner? A. 15 days. B. 30 days. C. 45 days. D. 60 days. The correct answer is B. The correct answer is that Maryland requires insurers to notify the Commissioner of Appointment Terminations within 30 days of the termination date. Reason A is not correct. Maryland allows more time than 15 days for filing termination notices. Reason C is not correct. The permitted filing period is shorter. It is not 45 days. Reason D is not correct. The statute does not allow up to 60 days for termination notices. Question 11. Linda, a Maryland licensed producer, moved her primary business address from Baltimore to Annapolis. Under Maryland law, by what deadline must Linda report her new address to the insurance commissioner? A. 10 days from the change. B. 30 days from the change. C. 45 days from the change. D. At her next license renewal. The correct answer is B. The correct answer is that Maryland requires licensed producers to report any change of address to the insurance commissioner within 30 days of the change. Reason A is not correct. The reporting period is longer than 10 days. Reason C is not correct. 45 days exceeds the statutory 30-day requirement. Reason D is not correct. Changes must be reported promptly, not deferred until renewal. Question 12. James, a Maryland licensed producer, had his license suspended in Virginia for misrepresentation, but did not report this administrative action to the Maryland commissioner. Under Maryland law, what consequence is James most likely to face? A. Automatic license revocation in Maryland. B. Civil penalty up to $5,000 and possible Maryland license suspension. C. Referral for criminal prosecution. D. Issuance of a written warning without further penalty. The correct answer is B. The correct answer is that failure to report an out-of-state administrative action can result in a civil penalty of up to $5,000 per violation and possible suspension of the Maryland license. Reason A is not correct. Revocation is not automatic. The regulator may impose penalties and suspend the license instead. Reason C is not correct. Criminal prosecution is not the standard consequence for non-reporting. Reason D is not correct. A written warning without penalty understates the statutory penalties. Question 13. Which title of the Maryland Insurance article establishes the Maryland Insurance Administration and outlines its general powers and duties? A. Title 4. B. Title 2. C. Title 6. D. Title 8. The correct answer is B. The Maryland Insurance article designates Title II as the section that creates and empowers the Maryland Insurance Administration, defining its structure and general authorities. Reason A is not correct. Title IV governs property and casualty insurance, not the administrative body. Reason C is not correct. Title VI covers producer licensing requirements rather than the administration itself. Reason D is not correct. Title VIII addresses life and health insurance provisions, not the administration establishment. Question 14. Under Maryland law, how often is the commissioner required to examine the financial condition and affairs of an admitted insurer? A. At least once every 3 years. B. At least once every 5 years. C. At least once every 7 years. D. At least once every 10 years. The correct answer is B. Maryland statutes mandate that the commissioner conduct a full financial and market conduct examination of each admitted insurer at least once every 5 years to ensure solvency and compliance. Reason A is not correct. A 3-year interval is shorter than the statutory 5-year requirement. Reason C is not correct. 7 years exceeds the maximum period allowed before an examination must occur. Reason D is not correct. 10 years is well beyond the statutory limit for required examinations. Question 15. Which of the following is an explicit statutory basis for initiating a market conduct examination of an insurer in Maryland? A. A pending merger with another insurer. B. Policyholder complaints exceeding a specified state average threshold. C. Failure to timely file the annual financial statement. D. Downgrade of the insurer's financial strength rating by a rating agency. The correct answer is B. Maryland law authorizes a market conduct examination when an insurer's complaint ratios exceed predetermined state averages, indicating possible unfair practices. Reason A is not correct. A corporate merger by itself does not automatically trigger a market conduct exam under Maryland statutes. Reason C is not correct. Late filing of financial statements relates to financial exams, not specifically market conduct exams. Reason D is not correct. A rating downgrade may prompt financial review but is not a statutory market conduct trigger. Question 16. Which of the following is required before an insurer may receive a certificate of authority to transact business in Maryland? A. Filing quarterly projections of future premium income. B. Maintaining a minimum paid-in capital of $1 million. C. Establishing an office in Maryland open 5 days a week. D. Appointment of a Maryland resident insurance agent for service of process. The correct answer is D. Maryland law mandates that every insurer designated to do business in the state must appoint a Maryland resident agent for service of process as a condition of its certificate of authority. Reason A is not correct. Quarterly projections are not a statutory prerequisite for an initial certificate of authority. Reason B is not correct. While capital requirements exist, a specific $1 million paid-in capital figure is not universally mandated for all insurers. Reason C is not correct. Insurers must maintain a registered office or agent, but not necessarily a staffed office 5 days a week. Question 17. Which statement correctly describes a non-admitted insurer under Maryland law? A. An insurer licensed by the state and subject to the Maryland Life and Health Insurers Guarantee Fund. B. An insurer not licensed in Maryland, but permitted to transact surplus lines through a licensed surplus line broker. C. An insurer that must file all policy rates and forms with a state regulator. D. An insurer required to maintain a resident agent for service of process. The correct answer is B. A non-admitted insurer is not licensed in Maryland and may only place business through a licensed surplus line broker without access to guarantee fund protection. Reason A is not correct. Admitted insurers, not non-admitted ones, are members of the state guarantee fund. Reason C is not correct. Non-admitted insurers do not file their rates and forms with state regulators. Reason D is not correct. Maintaining a resident agent is a requirement for admitted insurers obtaining a certificate of authority. Question 18. Under Maryland regulations, life insurance advertisements must be filed with the Maryland Insurance Administration at least how many days before their first use? A. 10 days. B. 30 days. C. 60 days. D. 90 days. The correct answer is B. Maryland rules require that all new or materially revised life insurance advertising be submitted to the Insurance Administration at least 30 days prior to its initial use. Reason A is not correct. A 10-day lead time is shorter than the 30-day requirement in Maryland. Reason C is not correct. 60 days exceeds the minimum 30-day submission requirement. Reason D is not correct. A 90-day advance filing is not mandated by Maryland regulations. Question 19. When including testimonials in life insurance advertising in Maryland, what must be conspicuously disclosed? A. That a representative policy illustration accompanies each testimonial. B. That the company directly compensated the endorsing individuals. C. That past results are not predictive of future outcomes. D. That the source of the testimonial was not a current policyholder. The correct answer is C. Maryland advertising regulations require a clear disclaimer stating that testimonials reflect individual experiences and are not guarantees or predictions of future results. Reason A is not correct. A representative illustration is not required only when a testimonial is used. Reason B is not correct. Compensation disclosures are required only if material not presumptively mandatory for all testimonials. Reason D is not correct. It is not prohibited to use current policyholders for testimonials without disclosure. Question 20. A producer provides a prospective client with a life insurance illustration showing projected dividends and cash values based on current company assumptions. Under Maryland law, which disclosure is mandatory in this illustration? A. A notice that non-guaranteed elements are based on the current scale and are not guaranteed under the policy. B. A statement of the insurer's most recent NAIC financial strength rating. C. A disclosure of the producer's commission percentage on the illustrated policy. D. A detailed breakdown of the insurer's expense loading assumptions. The correct answer is A. The correct answer is that illustrations must include a prominent notice indicating that non-guaranteed elements are based on the current scale and are not guaranteed. Other disclosures are not mandated in Maryland law. Reason B is not correct. Including the insurer's financial strength rating is not required under Maryland's life insurance illustration regulations. Reason C is not correct. Maryland law does not require producer commission disclosures in life insurance illustrations. Reason D is not correct. Expense loading assumptions need not be detailed in the illustration under state rules. Enjoyed this practice test? Tap like, hit subscribe, and share it with a classmate. Got a question we should tweak? Comment below. We read them all. Find full practice exam books in the description or at ExamPrep.School.